So we've all heard the term backtesting warrior or backtesting hero, and that refers to somebody who is very good at backtesting and can show consistent profitable results from their backtesting, but struggles when it comes to live trading. Now, why is that? What is the difference between backtesting and live trading? Now, in this video, I want to go into mainly the psychological differences, but there are technical differences too, and the main one being your broker will have a spread compared to TradingView, which has no spread or doesn't show it anyway. Now, on the broker, you may not get tagged into a trade or get stopped out of a trade, which on TradingView, you're perfectly still within that. And that will depend on certain factors, such as which broker you're using and which pairs you are trading. If you're using a raw spread broker on Euro USD, usually that spread is going to be between 0 and 0.1. But if you're trading something like gold, that spread can be fairly high, like 23 pips. Now, this can obviously have some effect, and what it means is your edge has to actually be better than you think it has to be. And so you have to allow for a certain number of trades that you won't get tagged in and certain number of trades that you will get stopped out of, that in your testing it shows that you should be winners. That isn't the main reason I wanted to do this video. The main reason is I wanted to focus on how your mindset is affected in live trading. And the main reason for this, in my opinion, is the time factor. Now, there is a huge difference between clicking away on TradingView in the bar replay on candles, like you can click, weeks, months, years in seconds. You can click through that amount of price action. Now, even a 1 minute candle in live trading feels like a lifetime compared to that click on TradingView. And it is in that lifetime of the candle that we can really be affected, especially once we've entered a trade. That is the main culprit of psychological struggles in trading, in my opinion. I've experienced it myself in the past. I still experience it now. If I'm in a trade, I'm in a long say, and I see a bearish candle forming against me. On my charts, the bearish candles are black, the bullish candles are white, and if I see a black candle coming against me, I feel the stress rising within me. I feel the tension in my neck. I feel that cortisol, that adrenaline, my heart's beating a bit faster, and I'm moody and snappy. On the other side of the spectrum, if it's a white bullish candle, then I feel that joy, that happiness that comes with seeing things go the way I want them to go. And I guess that's what they call ego. Now, also the time factor comes into play when you're experiencing a period of drawdown. Say you take a loss on one day and your session ends, you've now got to wait a whole day before you can trade again. So when we feel bad emotions and we experience bad things, our minds are designed to go into detective mode and figure out what that was. After our trading session, we may be inclined then, if we've taken a loss, to look into why we took that loss and try and prevent that in future. So that can lead us to making changes in our strategy, and that's something that I've experienced, and to try and mitigate those losses. We may try and find reasons we shouldn't have taken that trade, or find reasons we should have got into another trade. And it's very easily done, and you can't blame yourself for it because it is how the human mind works. We are detectives of the past. We try and figure things out to make things better in the future, and that is all fine and dandy in most things in life, but in trading, it's not necessarily the best thing to do. Now, of course, that is how we get our strategies in the first place. We look at past data and we figure out methods of getting involved in price that will be a net positive profit. But that is over years of data rather than one single session where we take a loss or we fail to take a win. And it's very easily said that we can have, say we have a black and white strategy and we just set rules to stick to that only. And it's very easily said, but if we go through that period of taking a loss and then the next day we take another loss and then there's not a setup the next day, and then it's the weekend and we've got to wait 2 more whole days before we can trade again. In backtesting, that's just a few clicks away. We can see what happens. In live trading, we have 48 hours of no trading over the weekend. It gives us too much time to think, and that, again, is why time is one of our worst enemies in trading. Now, another example is the fact that this month of June, my strategy for Euro USD has netted me 2% profit. Now, again, when I say that and I look at that, that's fine, that's good. That is a positive amount of profit. And if I were to see that in backtesting 12 days into the month, we're plus 2%, I'd be happy. And then I could go on and see what the final result of the month was. And usually it will be more than that, but if it's not, that's fine. But when you're live trading and say you're taking a prop firm challenge, you want to get to that profit target faster, and you want to make more money faster. And that brings me to prop firm challenges and why that is an issue as well. Now, it's not as much of an issue as it used to be, because it used to be that they all had a 30-day limit for the phase 1 of a prop firm challenge, and you had to make 10 or 8% in those 30 days. Now, that really put the pressure on traders, and trading shouldn't have time pressure like that. Now, thankfully, most prop firms have gotten rid of that now, and they have an unlimited time for you to complete the challenge, because they know that most people will fail anyway, regardless. But it does, again, give a lot more breathing room and allow for less profitable strategies that still have an edge to prevail in the prop firm world, which is really good. And strategies which have a lower percentage return tend to be ones that work better long term. But the issue with prop firms is still there mentally. The unlimited time frame doesn't help with our innate desire to get things done quickly, which is shown in the results of most people's challenges that they take. We really have to work on that instant gratification thing, and it's something that still plagues me to this day. It's very, very difficult to become somebody who is able to just trade within set rules. And again, it sounds like it should be an easy thing, but it's not. Why is it not? Because of time. Because time allows us to think too much. And there's no solution to this. I haven't found a method of time travel so that we can go into the future. So what then is the solution? Well, I have a very strict 3-hour trading session, and that allows me to forget about the charts once that finishes. Now, do I always forget about the charts? Does that completely solve this issue? No. If I have a bad session, say I take 1 or 2 losses, I'm still not going to feel like I do if I take, say, 1 or 2 wins in a session. However, it does allow me to know that I'm not taking any more trades outside of that session, either after or before. I know when I'm sitting down to trade, that time period of 3 hours. So that allows me not to continue chasing trades as much, especially if I do have a bad session. I'm not then going on sitting there all day and trying to take more trades that may or may not have fit my plan, then potentially taking more losses and feeling worse and worse and worse, not only because I've taken losses, but because I've taken losses outside of my trading session. I'm not going to do that. What also has helped me is a set and forget style of trading management. So I will, once I enter a trade, that is either going to be a win or a loss. And that again helps me not try and move my stop loss or move my take profit or close the trade or anything like that, because there are only 2 possible outcomes. It either goes up or it goes down, and there's nothing else I need to do, which also allows me not to watch trades, and that takes away from the issue of when that black candle comes to get my longs, or when those white candles come up to try and take out my shorts. I don't have that emotion because I'm not watching it. I will set an alert that tells me whether either the stop loss is taken out or the take profit has been hit. And that is all I want to know. I don't want to go through the emotions of it coming back looking like it's going to be a loss and then going on to be a win, because I know that that can make me want to move my stop loss or cut the trade short because I don't want to experience those negative emotions. Hello guys, I hope you enjoyed this video on live trading versus backtesting and the effects of time on our psychology and mindset when it comes to live trading. Let me know what you thought in the comments below, and don't forget to subscribe if you want to see more videos like this. Thanks a lot guys, I'll see you next time.